that we have reached the peak in terms of investment risks. And that's why since the last few days, you really don't see the Dow dropping by another 1,000 points. The PSEI is actually just moving sideways. So I think in the guts of all of our investors and traders, we feel that the bottom is there. We're just not ready to commit yet because there's still that risk. But I'm not worried about the deceleration this year because it's going to happen to all markets anyway. So that's fine.
There there's a lot of questions about, because of the lockdown, retail establishments are closed. You have a lot of anything that's events related, from weddings, debuts, conferences, concerts, all canceled. Then you have also the freelancer market not making any money. There's a lot of fears that this impacts consumption, and being that we are a consumption-driven economy, is that a concern, or you think once all of this is over, it will also come back and go back in stride as well?
Well, to put it into perspective, of course, everything gets hit, particularly the retail market. But you have to think that this is going to be not a V-shaped recovery, but a sort of a W shape, where we will go up and down, up and down. In terms of the market, in terms of the economy, it's really going to go down 2020. But there's a wild card. If and I pray to the Lord that it happens sooner than rather than later.
Okay, guys, we're in for another treat today. We have the chairman of EFA, Efrain Cruz, and what's so amazing about him is his years of experience in the markets. And a lot of people would joke he's the father of mutual fund because he's one of the longest in this industry as well. And what's nice about that is, in times like this we can lean on his wisdom, his experience, and also acumen, because as you all know, investing is all about also how much bullets you've been hit and then how you survive off of it. So Efrain Cruz, welcome to the vlog. Thank you so much for taking this time. Alam ko super busy ka, but thank you for taking this also. So first question, how are you first? How are you in all of this?
Well, thank you for having me, Marvin. Thank you for that nice introduction. That actually just means that I'm one of the oldest people in the industry. But we're doing fine. Marvin is asking if we're doing fine here, I guess, health-wise. My family and I are, of course, just like anybody else, lockdown's house, but we're doing okay. How about you, Marvin?
I'm okay. Markets are open. So parang nung first 2 days that it was closed, parang ang gagawin ko. But after that, parang it's okay lang. Yung difference lang is you don't get to eat what you want to eat. Di ka makakalabas. But okay lang eh. It's everything will go on. Now, first question, and of course, a lot of people want to know when will this end sa market, how will things go, but above and beyond that, my first question is this. How different is this from 1997, 2008? How do you see it play out in terms of the main difference sa economy and sa stock market?
Okay. Could you ask? Because I just actually wrote an article on that. It's coming out next week. And the title is also, when will this nightmare end? Anyway, you did mention a while ago that when the stock market was closed, you couldn't do anything. Actually, when they decided to close it, that was also one of the things that was done in the past crisis. And we've proven that that's not a very wise decision, because when the market opens, it's just going to open with a vengeance, whether it's on the sell side or on the buy side. And as it so happened, it was with a vengeance on the sell side. We're playing catch up with all of the selling going around with the other global markets. But shortening the trading hours is fine. That's also, I think, what we did before. If you compare the Asian financial crisis with the global financial crisis and now, it's coming out that the worst hit came with the Asian financial crisis, because then the index actually lost about 63% of its value uh, over a 4-year period. No? The economy at its worst, the GDP, contracted by about 0.6% at its worst. Although under the Asian financial crisis by 2001, it was already growing again by 3%. But you have to bear in mind that at that time, 3% was the normal average growth rate of the Philippines. It was just like chugging along. It wasn't really keeping up with inflation. It was not something to write home about. And by the way, the foreign exchange actually dropped by, I think, about 49%. From 26 something, it reached about the height of 55, 75, if I'm not mistaken. In the global financial crisis, stark contrast, because by the time the global financial crisis hit, Asia had learned its lesson. So we had with much reserves, we had better financial policies in place, we have better controls. That's why during that period, actually the peso appreciated by about 6%. While the stock market did also lose ground because it was through contagion. When the US dropped, so do we. We lost only about 36% as compared to the roughly about 63% in the Asian financial crisis. Fast forward to 2020, right now the peso has barely changed since the start of the year. We did lose uh, 32% year to date, but it's not yet the level of the global financial crisis, and it's nowhere near the near decimation that happened during the Asian financial crisis. In terms of exchange and stock market movements, we're more compatible with the global financial crisis. But in terms of GDP growth, there was really destruction here. That's why economists are estimating that the range will be anywhere from a negative 0.6% to about 3%. So, which is roughly what the Asian financial crisis was.
Mm.
But they're also saying, like ADB now is saying that, but it'll grow to about 6.5% in 2021. So I'm not worried about the deceleration this year because it's going to happen to all markets anyway. So that's fine.
There have there's a lot of questions about, because of the lockdown, retail establishments are closed. You have a lot of anything that's events related, from weddings, debuts, conferences, concerts, all canceled. Then you have also the freelancer market not making any money. There's a lot of fears that this impacts consumption, and being that we are a consumption-driven economy, is that a concern, or you think once all of this is over, it will also come back and go back in stride as well?
Well, to put it into perspective, of course, everything gets hit, no? Particularly the retail market. Uh, but you have to think that this is going to be not a V-shaped recovery, but a sort of a W shape, wherein we will go up and down, up and down. In terms of the market, in terms of the economy, it's really going to go down 2020. But there's a wild card. If and I pray to the Lord that it happens sooner than rather than later. If a drug is discovered for COVID-19 and a vaccine is developed against SARS coronavirus 2, that's going to lead to a V-shaped recovery. It's like saying that during World War II, it's like saying the war is ended. There's now peace around the globe. You're going to see a lot of upticks, not only in the stock market but also in the economy.
And I think I think because people are not going out right now because there's a lot also of fear as well. But when a vaccine is there, it might bring confidence back. People will travel again. People will eat out again, and it will be, I think, relatively better. That being said, if you are an investor now, let's segment it into two. You are a person who's investing into equity funds for the long term, and you are also an investor in the stock market, but you pick individual stocks also for the long term. What should be their approach? And just a heads up, the common questions is, if I buy now, but there's still a lot of uncertainty, what if there's a bigger decline that may happen? what's your insight or advice for that comment, for those comments?
Okay. Uh, yeah, if I, because of my age, I might forget, so just remind me. But as far as the question goes, will it go down further? See, here's the difference between the Asian financial crisis, the global financial crisis, and the COVID-19 crisis.
Mhm.
In the Asian financial crisis, it was mostly Asia. In the global financial crisis, it was not actually global. It was more of a crisis of the West. If you recall, right after, it was a V-shaped recovery in the global financial crisis. Just about 1.5 to 2 years later, in 2009, things started to move up in Asia because China was really chugging along nicely, and it dragged all of the other markets up. No? And you would see, like, for example, URC in October of 2008, I think it was 525. Later on, it was 125 pesos, just 4 years later. So, why am I saying that? Because in COVID-19, this is really a global crisis.
Mhm.
But what thing you've seen already is that the last piece of the puzzle, which is actually the US, has begun to actually be serious about it.
Mhm.
And they are pumping in a lot of money into their economy. If you look all around the globe, governments are arming to the teeth. They're arming to the teeth with all of these stimulus packages. Their central banks are very dovish, and I think even uh, doing a lot of monetary easing. Our central bank, even before this, was already doing some monetary easing, and they will continue to do that this year. And even the multilateral lending agencies are pitching in.
Mhm.
So in this case, the whole world is acting as a team against coronavirus. No? So we may have been knocked down first two rounds, but this time around, we're going to come back and really beat this virus.
Mhm.
That being said, and I've been monitoring the news agencies like Bloomberg, Reuters, and everything else, and I've been seeing some sort of sentiment brewing that some people, some quarters are saying already that the bottom seems to be there,
Mhm.
that we have reached the peak in terms of investment uh, risks.
Mhm.
And that's why since the last few days, you really don't see the Dow dropping by another 1,000 points. The PSEI is actually just moving sideways.
Mhm.
So I think in the guts of all of our investors and traders, we feel that the bottom is there. We're just not ready to commit yet because there's still that risk. But the bottom may not be. We may not be at the bottom, but we are very near the bottom.
Mhm.
So should you be buying now? If you're a trader, you could maybe in bite sizes first,
Mhm.
feel the market. But really, the time to buy is when you see all of these stocks moving up, just starting to move up, and when they're backed up by volume, that's the time to really be aggressive.
Mhm.
But if you are a long-term investor, keep on buying or keep on holding on to what you have. You may need to reallocate because for sure the speculative stocks will be out of the picture for a while.
Mhm.
The market was driven down by fear
Mhm.
all across the board, but the optimism will probably start with the the old reliables like the blue chips. Just
Mhm.
so maybe if you have second liners, even third liners in your portfolio, you may want to rebalance and
Mhm.
focus first on these. And you may want to even look at technically those stocks that have a beta, sorry to be for being a nerd, but a beta which is slightly higher than the market, so
Mhm.
that you can add a little bit of what they call extra returns. Mind you, in a bull run, nobody beats the index.
Mhm.
Nobody.
Mhm. That being said, so we address people who are uh, picking stocks. I like what you said. Look for the ones that have high beta because they're the ones that will spike up when things are relatively good. For those someone who are into funds, would it be better just to go to just the index, or would you suggest that they get equity funds that have leeway for fund managers to pick and select as well?
Well, you know what? They say that in an efficient market, you cannot outperform the index. In our country, because we're not yet that efficient as the US, there are several equity funds that actually outperform the index. And we are even also, my company is even advising proprietary funds of certain companies, and they have also outperformed the index. But that was not in a time wherein there was a bull run. So in this time, if you really want to maximize your return, you're not looking at goals, you're just looking at returns, which is not really advisable. But just if you're doing that, just buy into the index or buy into an index fund.
Mm. Is it also based on what you're saying? No, if we are at the 5,000 plus level, is it also safe to assume that the downside is lesser already? That even if it goes lower, how it goes low is not anymore as big as what happened, and the upside is much bigger from where we are right now.
Yes. Again, look back at the Asian financial crisis. It hit a high of 3,448. And I remember that distinctly because when it reached that high at that time, that was an all-time high, I think July of 1997. The president of the Philippine Stocks Exchange, I think the SEC, the Secretary of Finance, went to the exchange. They toasted. They were celebrating the high of the exchange, the index. Huh? The day after, it went down, continuously went down.
Wow.
But from 3,448, it went down to 1,000. Then by about 2002, it was back up to about 3,000 again. Okay. Very near what it started at. So if you're looking at us, but we're more comparable to the global financial crisis, we're already almost at the 37% drop in the global financial crisis. We're 32. So you're right. Maybe the downside is not that big. The upside is great, but the upside will not be like we will hit 10,000. That's too far into the future path. We'll probably try to go back to maybe the high 7,000 level. That's a target.
Okay. That being said, no, since we risk is lower, how will you segment it for people who have investable funds? Should they still parang keep cash still even if they invest, or is it a good time already? Sige, I have this much in at this particular period, pasok na ako. And provided, just to put some narratives into this, these are people who di naman affected yung cash flow. They still have probably good income from their jobs or their businesses, and they have a level of cash for their needs. This is just purely cash na lang. Is it wise for them na magtabi pa just in case things get bad, or this is already the opportune moment?
Well, as Warren Buffett has advised, treat it like a punch card. You know, in his time, when you clocked in, you put in a punch card in a time machine. No? You don't do that. You don't finish all of the slots of dates of your punch card in one day, in one go. No? So I would also suggest that maybe you feel the water first. No? Do a little bit. It's not time to put everything in. As we mentioned, there may be still a downside. And if you go by the rule of the greatest trader in the world, Jesse Livermore, he always said, don't buy when the market is going down and it looks like it's going to bottom. The bottoming out is the inflection point. You buy when you see a continuation of that inflection or pivotal point that is supported by volume. That's where you should be putting in everything. But now, not yet.
Amazing. I know this is not part of the economy, no? Bakit ang galing mo? What makes you so... Is that the experience, or talagang you really... The way you explain it and the way you think, is that purely skill, or years of experience na rin in knowing and comparing the times also? And I'm sure there are a lot of people who are wondering, why is he so good? What's your secret sauce in all of this?
Okay. Flattery will get you nowhere. But anyway, here's the thing. Before, it was the bragging rights of my peers that, we've been through all of these crises, no? Asian financial crisis, Russia, Argentina, the dot-com, everything, everything in between the Asian financial crisis and the global financial crisis. However, none of those are global in nature in the true sense of the word. It is only now that it is truly global. No? It's like the Spanish flu at that time. But this one, it's like going through a world war. No?
Mm.
None of my peers have been through that.
Mm.
This is a very good time for people to really learn what is going on. No? Absorb all of the lessons. As I was telling we call them the Yaman coaches. No? You have front seats to this unique experience that you can use to actually advise the generation, the millennial generation, maybe even the generation after the millennial generation, if you're still around. But yeah, learn from it. No? And after this, you will be as good as the older guys like me. No? Because this coronavirus actually is a bulldozer, as I said. It leveled the playing field. So don't think I'm good. We're now equal because you have an experience that I'm also experiencing only now.
Amazing. So it's really experience now, and I guess one of the things that's so important is for people investing is not to rush it. When everything was so good, people would just always want to make money without building the skill and the experience, and this time creates experience. I have a question based on what you said. You said that para we are in a world war, we are experiencing something that we have not experienced before. Looking at the data in the US, 10 million jobs were lost in the past 2 weeks already. Is that a concern? But since they're just printing money forever, QE infinity, is that enough to protect everything that we're actually seeing, or will that be a concern later on in the future as well?
Well, that would be a concern later on. But the thing is that everybody else is doing it. So everybody else is printing money. So there's not going to be external shocks to their economy. Same with ours. So if everybody else does the same thing, it's like the whole world moving up again. It's all at the same time. By the way, they actually created 16 million jobs and now they lost 10 million. So, they still have 6 million to go.
That's a good way to look at it. No, and it was just shocking for it to just boom spike up that fast very very soon.
In 2 weeks.
Yeah. Another question, and I've been getting this a lot, and we've created many videos about it, but it's nice to also hear it from you. There are people who bought when the index was at 9,000, 8,000, 7,000, and for some of them who have not experienced drops like this, what do you suggest? Number one, stay the course, hold if you don't have cash, especially if you don't need the money. Number two, add to your position, especially if you have extra money and you don't also need it. Number three, and a lot of people have been asking this, should you transfer to bond funds because it will protect you from the volatility? What's your take in that?
Okay. Firstly, it's too late to sell. Still too early to buy, but it's too late to sell. Transferring to a bond fund is not a very good choice at this time. More importantly, you probably went into equities because you had a goal to meet. And only equities could provide that return to help you achieve that goal. So that wouldn't be advisable, getting out of equity. Now, the other choices are, do you just add, or what's the other one?
Stay the course, hold on to your position, or if you have more money, you add into it as well.
I would say add more to it because we don't really have everything to invest at one time. So as soon as you get more money to invest it. But this time around, I know timing in the market is not that important as time in the market, but still, you may get a little bit more advantage if you just wait a while, so that you protect your downside. Huh? So try to catch that market when it's actually about going up already, supported by volume, and also take this time of quarantine to just like go on vacation. Don't worry about the market. It's going to heal itself.
Galing. Final two questions before I put this to a close. Number one, what skills do you think they should build right now in terms of, if they're not looking at the market, what should they learn during this lockdown in order for them right after this, when we get through this, when we get past this, they become better investors, or they become better in handling their money? If it were you, and you were also in your 20s or your 30s or your 40s, and then you got shocked na, oh, all of these things are real pala, what would you impart to them?
Well, I would tell them that take care of the most expensive real estate. They say that the most expensive real estate is not outside of you, it's inside of you, and that's your brain. Because everybody's trying to compete for getting a piece of that action, trying to persuade you to do this or that. I would say sharpen your tool while you're in quarantine. Read a lot of books. Now, there are a lot of books out there that you can use to actually develop your own skill. Marvin Gurmo is a very good author. He has a lot of books on equity trading. So why don't you read that? There are also a lot of foreign books. You just have to make sure that you filter them so that you can apply them to the Philippine setting. No, they will be nerdy, but be patient. No, I also went through that thing. I was reading stuff that I've never read before. It gave me a headache every time I read it. But now, since I understand it more, it's easier. So, but do this. Use this time now to actually sharpen the tool, no, and take care of that real estate that you have, the most expensive one.
Is that the intelligent investor? Every time I try to read it, parang, ang hirap nito basahin, ang hirap. That's the English.
There is actually another book that was my Bible. It's modern portfolio management, security analysis, modern portfolio management. It's not available anymore, but that was my Bible, and I learned everything from that. Wow. So pick up if they want a book that does not have any numbers but explains the entire capital markets. They might want to get a hold of that book. See Lucas Snopek. Lucas is spelled Lucaz, and Snopek is Snopek. Gosh, I forgot. Can I email it to you?
Yeah, and I'll put it in the description for those who want to know more about it.
Actually,
okay.
Actually, if you don't mind, Marvin, I actually made a post on the books that I've been reading. So maybe I can give you the link, and they can,
Of course.
That book of Lucas Snopek is there.
Speaking of books, I want people to know about your books as well. You've written a lot of books that's so beneficial to so many Filipinos. So for those who are watching this, at least can you share it also to them, and how can they get them after the lockdown?
Well, the problem with my books is that whenever I write a book, it includes regulation. So if regulations change and I don't update the book, it gets to be obsolete. So many of my books have already been sort of obsolete because I did not update them. There are 3 books that I've written. One I co-wrote with Henry and Randall Johnson. This is the Money Matters book of the Philippine Daily Inquirer. It's really a compilation of the articles we've written for the Inquirer. But the other 2 books are one, which is free. It's the 50th anniversary book of the PDIC. They can download it from pdic.gov.ph for free. The other one is the Taming the Rebel Issue. It's the behavioral economics book that we have that I co-wrote with a neurologist and a psychologist. Wow. That's Taming the Rebel Issue. If they want to get a copy, they can just message me on my Facebook, or can I give them my mobile?
Yeah. You can say it now, and I'll also put it in the description as well. Yeah.
All right. It's 0917 505 0709.
Okay.
Just text us, and we will send you the instructions how to order the Taming the Rebel Issue. And by the way, that's the only book in this country that if you subscribe to the service, and it's free, you get daily texting of personal finance lessons for 1 year.
Wow. Lastly, before we end, and I ask this every time I've been making videos, sobrang daming tao ngayon anxious, takot, yung mga tao na medyo depressed kasi they didn't expect this happening to their business. Some of them have amortizations to pay, car loans to pay. What do you advise them? Any words of encouragement for them that did not prepare financially for this and are a bit scared as well?
Well, when it comes to loans, the recent act signed by Duterte allows, they have actually instructed the banks and the lenders to give a moratorium, whether it's government or the private sector banks. So no problem there. Just talk to your lenders, even if they're not covered. Let's say they are online lenders. Talk to them nicely, and ask for at least a 1-month moratorium on your payment so that you're not that pressured.
Mm.
So when it comes to investing, well, if you don't have that cash, then we can't do much about it, except that please know, you don't really need a whole lot to invest.
Mm.
There are many pool funds out there now that require 1,000 pesos or less to just open an account. So look for them and be on the road to regular or periodic investing so that it's automatic within you.
Galing. Uh, I know you gave your number already, but for those who want to join PFA, how can they be part of your programs as well?
All right. Well, for those, there are two types of. For those who are problematic with money, we do have an advocacy. It's called Enrich Good. Good stands for getting out of debt. If you go to our website, personalfinance.ph, and just look at the menu, you'll see there Enrich Good, and you'll see what we can do for you. For
Mm.
those who want to be financial advisors, to be part of our team of Yaman coaches, they they can actually go to our website also and just go to the section where it's about coaches. It's actually the same website slash coach.html,
Mm.
and then find out how we can train them, not only in the classroom but also help them actually get clients. We have this messenger group, for example, that daily we actually provide advice to the financial advisors so that they can be better at their job.
Galing. So I'll for everything I'll try to put the links in the description. So if you want to get in touch with Efren Cruz, you can. So I highly suggest that you do kasi guys, sobrang galing niya. If you the wealth of experience is something that is very very important in the markets, and it's not just about how much you know, it's about how you live it as well. So thank you so much, PFA Chairman CEO Efren Cruz, and one of the one of the greatest RFPs that I've ever encountered as well. So thank you for gracing us in the vlog. And for everyone watching, if you guys have any questions, just comment below and we'll try to make videos off of that as well. And we'll just do as much as we can during this lockdown period. We're going to do so many videos so that you guys also get not just entertained, but you you build the skill, you get informed so that you get to make the right decisions when it comes to your finances. So I guess that's it for now. Thank you so much, Efren Cruz, Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.